we'll be waiting 2 more minutes, then we'll go with this.
Recording in progress.
Yes. So today we'll be going with the objectives of So first we'll be discussing the objectives of not-for-profit organizations. So yesterday last session we had a discussion on the objectives of the organizations which are established with the main motive of earning the profits, and we understood that profit maximization is the primary objective of these profit organizations. Now when it comes to the organizations which are mainly established for a service motive, it means that if it is a not-for-profit organization. Now, generally, can we consider the same primary objective of wealth maximization to this, or is there any different objectives which are to be considered for these not-for-profit organizations? We will be focusing on this. Now, here you can see the primary objective of not-for-profit organization is not to make the profit, but to benefit prescribed groups of people. Now, I hope you might be aware, generally you might be finding different societies. Example, agriculture cooperative societies or farmer cooperative societies, or a small entrepreneurs cooperative societies. It means the main objective of these cooperative societies is to provide the benefit to their members. So in order to provide the benefit to the members, these cooperative societies are established. And in addition to that, we can also consider the charitable organizations. So here we do have a number of charitable organizations. It may be religious charitable organizations or any organizations which are established mainly for the purpose of promoting sports. So if these, how we need to consider the objectives of these not-for-profit organizations. So generally the primary objective of these organizations is to provide the benefit to their group members. Now nothing but let us assume that if any specific not-for-profit organization is established for the purpose of providing free education to the students of a specific locality, it means that their main objective would be providing this free education. So here there is no concept of wealth maximization and all this. So the main agenda of establishing this not-for-profit organization is to provide the benefit to their members. So the key issues when planning with not-for-profit organizations, as a finance manager, if you're planning for this not-for-profit organization, what are the key issues should be considered? See, the major difference which you need to understand is the role of a finance manager in case of profit organizations and the role of finance manager in case of not-for-profit organization definitely differs. So here he won't be making the decisions on the basis of maximizing the wealth or maximizing the wealth of other stakeholders. So here the only sole objective is to provide the benefit. And in addition to that, the key issues which are to be considered is multiple objectives which are often harder to prioritize. Suppose example, if you take an hospital, treating more patients versus better patient care.
Okay.
I request the participants to please mute your speaker.
Escucha, Hernández. Ready already?
During the session, please don't enable your speaker. So I will be giving you time if you want to ask any question. Okay. So I'm expecting this should not be repeated in the sessions. Okay. So the key issues, suppose if we take hospitals, because hospital is a not-for-profit organization. So here the major objectives of this is, see, hospital treating nothing but treating more patients. That can be one of the objective, and the second one is better patient care. So better patient care. See, it means what I'm trying to say, when it comes to not-for-profit organization, it is very difficult to prioritize the objectives. So here a given example is treating more patients and providing better patient care. Then, while cost may be easy to measure, the benefits and performance are often notoriously difficult to quantify. An example, quality of the patient care. So it means that whatever the expenses which are incurred to provide these services can be easily measured. But when it comes to the quality elements, like suppose example, if you want to measure the quality of patient care, then it is very, of course, I am not saying that it is impossible to measure this, but definitely compared with the measurement of quantity items, it is very difficult to go with qualitative items. Then influence of funding bodies. Now here, most of the charitable organizations, they do have a specific source. Suppose if the government is a funding body, now definitely all the major decisions are taken by the major funders. Nothing but if the government is funding majority of sources to the not-for-profit organization, then definitely you can easily guess it that the government might intervene in the operations of these particular organizations. Now here one more point I want to add. I hope you might be aware about the top corporate companies. They do have a charitable organization. Suppose Reliance Foundation is there, Tata Foundation is there. Now, like this, most of the top corporate tycoons are having their Reliance, nothing but charitable organizations. Now, these are the, it means these organizations are the major source of fund for the charitable organizations. It means they are funding, so definitely they will be intervening or they will be influencing the operations of that particular charitable organizations. And the next one is, it may be difficult to measure the objectives as they are often non-financial. Example, reducing suffering caused by a natural disaster. Now it means that in case of not-for-profit organizations, it is practically very difficult to measure the objectives because most of the objectives are non-financial. Suppose here when we were discussing about the hospital providing better patient care, this is a non-financial objective. So it is very difficult to measure it. And here one more example is given, reducing suffering caused by a natural disaster. I hope you might be aware we do find some charitable organizations which are exclusively established to provide aid at the time of natural disaster. Now here their objective is whenever there is a natural disaster, so the main objective is to minimize the damage or minimize the loss of nothing but the loss of life in case of these disasters. So this is a non-financial. So minimizing the deaths in case of a natural disaster is a non-financial objective for that particular charitable organization. Now, when it comes to measuring it, it might be difficult. Of course, I'm not saying that impossible. We can do that, but wide range of stakeholders with a high level of interest. Now, in these non-financing organizations, wide range of stakeholders. So here, stakeholders in the sense we can consider the subscribers, initial promoters of this charitable organization, beneficiaries, nothing but whoever benefited from that particular organization, even the government, because and even the tax authorities also. I hope you might be aware. Generally, if we consider India, whatever donations which are made to the eligible charitable institutions can be claimed as an exemption. from a assessee point of view. So it means the tax authorities are also interested. They will also be showing high level of interest in this, because in order to know whether these organizations comes under the bracket of eligible institutes or not. Then long-term planning horizons. So here, as a charitable organizations, what is their vision and mission? And funding may be a funding may be a series of advances and not a lump sum. Now, in most of the cases, it is very difficult to get a lump sum amount to the charitable institutes. Now, most of the subscribers prefer to donate in a series of payments. It means either they might go with a monthly subscriptions, or a quarterly subscriptions, or a annual or semi-annual subscription. So here I'm not see, always not necessary that donations will be coming under a series of subscriptions. Of course, lump sum will also be getting, but if you compare a lump sum subscriptions with a series of subscriptions, so the quantity of series of subscriptions are generally high. So a little or no financial input from the ultimate recipients of the service. It means whoever beneficiaries are there, now generally there will be very little contribution. Contribution in the sense I am speaking from financial contribution perspective. So there will be only a little financial contribution from the beneficiaries, or in some cases there will not be any subscription also. There will not be any contribution also from these actual beneficiaries, in the sense who actually benefited from that particular not-for-profit organization. So these are the key issues which are to be considered. Now, generally, the key point which you need to remember is the non-financial objectives are often more important and more complex. See, when it comes to the financial objectives, as I mentioned, see, financial objectives in the sense the company, the not-for-profit organization always try to effectively utilize their resources. It means they don't want to unnecessarily waste their money on any unnecessary expense. So optimizing the expenses or effective utilizing the financial resources can be considered as a financial objective of this not-for-profit organization. But the major role is not nothing but non-for-profit organization, but non-financial objectives. And as I mentioned, practically there are certain obstacles which might cause an issue for calculating, or for especially for measuring the non-financial objectives. So these are certain key issues which are to be considered for a not-for-profit organization. So I request the participants to please once go through these key issues, and you can let me know if you have any query. All the participants, please once go through these points. I hope you are going through. Okay, definitely. So one request I got is the long-term horizon. I will be explaining. Then the second point which you want me to explain, wide range of stakeholders point. Okay, done. I will be explaining that. Wide range of stakeholders with interest point in. Okay, yeah, definitely. Now first let me focus on the long-term planning horizon. Generally, most of this not-for-profit organization, they will be having a clear vision and mission. It means that generally what in what position the not-for-profit organization should be in after 5 years. It means, let us assume that if I take hospital as an example, now a small charitable organization or a not-for-profit organization opened a hospital, and initially they were treating the patients for that particular specific locality only, and there were no surgical what is this treatment. Only it is a general type of physician services were provided in that particular hospital. It means first they started with a basic service, basic medical services. Now, then when they establish, their main target would be, it means what is the main objective for establishing that particular hospital. So the main objective would be nothing but converting that particular hospital into a multi-specialty hospital. And that is so long term planning origin, the long term planning objective would be converting it into a multi-specialty hospital and providing the best quality providing the best service with a minimum price. So that might be one their long term planning horizon. So it means most of the objectives are long term. So immediately it may not be possible. Say suppose as I mentioned, maybe in a span of 10 years or a 5 years, if the not-for-profit organization is focusing on developing the present hospital into multi-specialty hospital. So in that case, how much funds they need and what are the sources which they required in order to convert it into a multi-specialty hospital. Sources in the sense, how much human resources they required, financial resources they required, what kind of permissions they need to get it. So this is nothing but long-term planning horizon. So I hope I addressed your query regarding this. Is that clear? Yeah. Now the next interesting query is a wide range of stakeholders at a high level of interest. Now wide range of stakeholders in the sense, see normally in case of uh, profit organization also, of course we do have wide range of stakeholders, but we will be mainly focusing on the shareholders, management, employees, and the suppliers. These are the primary stakeholders which we generally consider for a profit organization. But in case of not-for-profit organization, beneficiaries are there, and the people who are working in the not-for-profit organizations are there, and the subscribers who actually provide financial resources to the not-for-profit organization, there are there, and the government, because government will be giving certain benefits to this not-for-profit organization. See, I hope you might be aware, if any organization want to open a sports complex, now the government might allocate a specific land to them to open a sports complex. It means government is a stakeholder in that. Then all the people who belongs to that particular area will be showing interest to join in that particular sports complex. So there are all these local people can be considered as the stakeholders and the subscribers. So in order to maintain the sports complex, they need funds. So they will be requesting the donors to subscribe the amount. So the donors can also be considered as the stakeholders. And whoever donated the money, they are eligible to claim a tax exemption. So tax authority will also be having an interest in that. So it means, and the beneficiaries who actually benefited from that particular organization. So here wide range of stakeholders will be there in the not-for-profit organization, and very interestingly, they will be having high level of interest in that. Why high level of interest? Suppose as a beneficiary, if I am getting a benefit from that particular organization, so definitely my level of interest will be high. And even if I donate a single penny also, let us assume that I am donating a monthly $100 to this particular sports complex. So definitely I want to know how it is functioning. So here naturally we can expect a high level of interest from the subscribers. And as I mentioned, government also donated a land to the sports complex. Now definitely government will also be intervening in the regular operations of that particular sports complex. So this is known as high level of interest, wide range of stakeholders and the high level of. I hope it is clear. Any queries? Yeah. Now, any specific point you want me to address in this? So, shall I assume that all these key issues are clear? Shall we go with the next concept? Yeah. So, I assume that I can go with the next one. I'm expecting you to confirm it. Yeah. Last point. What is that? Yeah. That is little or no financial input from the ultimate recipients. Now, as I mentioned, whoever actually benefited from that particular not-for-profit organization, there will be very little contribution from them, or in some cases, there won't be any contribution also. The contribution in the sense I'm especially highlighting the financial contribution. Of course, they might involve themselves for the non-financial element, but financial contributions very little. It means whoever actually received that particular service. Now, I was addressing or I was mentioning about the sports complex. Let us assume that a specific whoever the rural youth of that particular area got some training in a specific sport, but not necessary that that particular rural youth will be contributing any financial resource to the company, because it is a charitable organization. They won't be collecting any amount from them, right? So because there is no collection of amount, so a negligible or very little contribution we can expect from the ultimate recipients of the service. I hope it is clear now. Yeah. Now the next one is the services provider are limited by the funds available. So next to financial objectives. So we mainly focus on the non-financial element of not-for-profit organization. Now before that, let me know whether this font is comfortable or you want me to increase the font. Yeah. I hope it is clear now. Yeah. Now the financial objectives. So I request the participants to please focus on this. Now the key objectives for the not-for-profit organization is raise as large as sum as possible. So the first important thing is here they are not getting any income from the beneficiaries. They are not getting any contribution from the beneficiaries because most of the services are freely provided, but they need funds for their operations, right? So the key objective of not-for-profit organization is to raise as much as possible. And the next one is spend the funds effectively. It means whatever funds which are collected from the subscribers or from the donors, those funds ought to be effectively utilized. It means they should not unnecessarily spend the amount. Now the targets are set per period. So here generally if you see total to be raised in grants and voluntary income, it means that what I'm trying to say, the financial objectives are generally set on a regular periodical basis. Suppose example for the current reporting year, what should be the total amount of funds which are to be raised? So how much funds are to be pulled from the donors and the subscribers? Then maximum percentage of this total that fundraising expenses represents. Very, very important. Maximum percentage of this total that fund raising expenses represents. It means that if you are raising the fund for any specific expenses, and one more point here is what is the percentage of this particular total fund compared with the expense. Suppose if a not-for-profit expense organization every year they are incurring $1 lakh, so these $1 lakh is their expenses, and during that particular year how much fund they are collecting, so what is the percentage of that particular fund? So it means that they always try to raise maximum. It means maximum percentage of expenses should be nothing but raised through funds. Next, amounts to be spent on a specified project or in a particular areas. So it means that what amount should be spent. So how much amount should be spent for, let us assume that if a company, the not-for-profit organization is planning to construct a new building for their office. So what is the allocated funds for that particular building during the year? So it means every year they need to clearly decide the segregation of expenses and the funds to be spent on a specific expense and maximum permitted administration cost. So this is a very, very important point for not-for-profit organization. So what is the maximum permitted administration cost? If there is no limit for the administration cost, definitely there is a possibility that a misuse of funds will be raised. So always a not-for-profit organization need to fix a specific a limit towards the administration. Administration in the sense it can be rent for the building, or it can be the salaries for the staff who are involved in the regular operations of that particular organization, or it can be any other expense like administration expenses like the power expenses and all these things. And meeting the budget. Now meeting the budget means let us assume that the organization want to construct a building and their budgeted value of the building is $1 lakh. So always they need to focus on meeting that particular budgeted value. There should not be any significant variance between the actual expense incurred and the budgeted value. So they always try to minimize the variance between the standard and the actual. And the next one is break even in the long run. Of course, initially break even may not be possible. Break even in the sense the funds collected and the expenses should be equal in the long run. Now, other measures, that is waiting time, successful outcomes, all these are certain uh, targets which are to be considered. So waiting time in the sense, suppose if the charitable organization is providing a service, now definitely we can expect a large queue or nothing but a large beneficiaries. Now it is not possible for the organization to provide the service in real time. So it might take certain time. So how much time a beneficiary is taking, nothing but how much time an organization is taking to provide the service to the beneficiary. So always an organization may focus on minimizing the waiting time of the beneficiaries. So these are certain targets which are to be considered. So any specific point you want me to address on this? So one thing you need to remember is the primary objective would be to raise as much as possible and to spend the funds effectively. So effective utilization of funds and raising the maximum possible amount. These are the two primary objectives. But every year they do have certain targets. So these are mentioned below. Now break even in the long run means if you can recollect, I already mentioned that in the initial phase, now definitely it means that the company might, it means what I'm trying to say, especially for a not-for-profit organization, initially when they establish, they will, what is this? They will create a specific fund. Now we generally say it as corporate fund. Whenever this charitable organization is established, they will create a specific fund depending upon their nature of service. Now, in case of emergency, suppose if the company don't, if the organization don't have sufficient resources, and in case of an emergency, if they are unable to meet their expenses, they will be utilizing this particular fund. But the main objective of the organization is they should not depend upon this particular fund. They need to create a regular donations or subscriptions every year so that that particular amount is sufficient to meet their annual expenses. Now they should not withdraw the amount from the corporate surplus, nothing but the corporate fund to meet the expenses. These expenses are to be managed with the regular contributions which they generally expect every year. So initially it may not be possible because initially we cannot, a charitable organization cannot raise that much particular fund. Definitely they will be utilizing the corporate fund there. But in long run, at least they need to try for the break even. It means the regular revenue It means annual revenue should be sufficient to meet their annual expenses. So that is known as meeting the break even in long term. I hope it is clear now. Did I address your query or any other questions? Yeah. First point, what is that? Total to be raised in grants and voluntary income. Grants and voluntary income. Okay. Now, total to be raised, whatever the fund requirement, it means that for that particular year, suppose if I consider 2020 and 2021. So, in that case, what is the targeted amount of funds which are planning to raise? It means this particular year, how much funds they are planning to raise. So, every organization, every not-for-profit organization will fix a target. So, this year, our target is to raise, let us assume that 1 million. So, it can be through grants or the voluntary income. Grants in the sense, I'm speaking from the government perspective. If they are planning to pull the resource from the government, that can be considered as a grant, and the voluntary income. So voluntary income in the sense, whoever the beneficiaries are there or the subscribers, all these are the voluntary. Okay. So that's why if you see the next point, actual compared to the target, every year this not-for-profit organization will fix the target. And at the end of the year, they will be comparing whether they succeeded in achieving the targets or not. If they are unable to achieve the target, they need to take the required actions so that they won't be facing the same issue in the next reporting. Okay. So these are the financial objectives of not-for-profit organizations. So shall I move with the next point? Now here, for a better understanding, you can visualize your known not-for-profit organization. Suppose example, we can take an orphanage. We can consider an orphanage. Okay. What is that last point? Other measures, waiting time, successful outcomes, etc. Now let me say here, waiting time in the sense how much time the beneficiaries need to wait to avail your service. Suppose if I take hospital as an example, so how much time patient need to wait to receive your service. And successful outcomes. Suppose successful outcomes means, let us assume that if you fix a target of providing the service to at least 100 patients during the year, whether you succeeded in that or not, that is successful outcomes. Okay. So for a better understanding, try to visualize an orphanage. Now, orphanage is a not-for-profit organization. I hope everyone might be knowing. Now, what are the general source of income for the orphanages? Can anyone? How the orphanages will receive the income? How they will receive the funds? Yes. So the primary source of income for them is donations only. Now, if you see the donations also, not necessary that all the donations in lump sum. Some donors might donate every month also, right? And I hope you might be aware about this. Some donors will agree to donate a regular contribution every month to the orphanages. But who are the now just see from the beneficiaries point of view. Will they get any financial contribution from the beneficiaries? Will orphanage get any financial contribution from the beneficiaries? No. So it means that's why I said that very little or no contribution from the beneficiaries for the orphanages. So their major source would be the donations. Now, every year, what these orphanages will be doing, let us assume that 100 children is there in the orphanage, and their objective is to provide education to all these 100 children and to provide good quality food and to provide all the required services to these beneficiaries. Now, in order to provide this service, definitely they need a specific fund. Now, during the year, 100 children is there, and if they calculate or if they estimate that on every child they are going to spend, let us assume that 30,000 per annum. It includes both education, food, everything, right? So they need this. So it means that every child they need 30,000 and 100 children is there in that. So 30,000 into 100. So it means they need 30 lakhs to maintain the organization this year. So first they need to search for the sources, how they can pull the 30 lakhs for the year. And the one participant asked me to explain the fourth point, maximum permitted administration cost. Now, maximum permitted administration cost means, let us assume that what will be the administration cost for an orphanage, rent for the building, power charges, right? And if they recruit any instructor to train the students, maybe on Sundays or the evening. See, I hope you might be aware to these orphanages. Now, most of what is this people will try to share their knowledge at free of cost. So we can observe that even some graduation students or post graduation students, they will be visiting these orphanages and they will be training, maybe providing the computer skills to the children, all these things. So it means administration cost means they need to fix. If there is no control on the administration cost, then it is very difficult for the orphanage to run. So I hope it is clear. Second point, maximum percentage of this total that funds raising expenses. It means that whatever amount which is raised, as I mentioned in the first point, how much amount they are planning to raise during the year, and what is the percentage of that particular fund when it compares to the expenses. Suppose, as I mentioned, the expenses are 30 lakhs, but you raised only 20 lakhs. So we always try to see to increase the percentage. It means the fund raised during the year should sufficient to meet the expenses required during the year. Because if you are unable to do that, then the only option is whatever your surplus, whatever your corporate fund is there, you need to withdraw that particular amount. You need to utilize it from there. Okay. So here one more point I want to say, whenever you are learning a concept, try to visualize from the practical scenario. Here I took an example of orphanage. So orphanage is a not-for-profit organization. So whatever knowledge you have, try to link it. What is the functioning of an orphanage? And if you get time, you can visit there and you can also know what is the process, what is the functioning, how they are raising the funds, how they are deploying the funds. So this will definitely enhances your practical understanding. I hope it is clear. Any other question? Shall I go with the next one? Now, the next important concept is value for money. We generally say it as VFM. Now, value for money is achieving the desired level and the quality of service at most economic cost. It means achieving the nothing but providing the quality service with the minimum cost. So, value for money is important due to the nature of not-for-profit organization and because they are facing an increasing need for accountability. Because if you can recollect, there are large stakeholders who are very much interested in this particular not-for-profit organization. So they are accountable to the different stakeholders. So here, see, very accountable to the different stakeholders means, let us assume that if I am contributing 5,000 to an orphanage every year, so definitely I want to know how the orphanage is functioning and how my money is utilizing. Suppose my major part of money is used as a salaries to the staff of the orphanage. Now, can I assume that my money is used effectively? I hope you got my question. If I am contributing 5,000 every month to an orphanage, and if my money, the major part of my money is utilized to pay salary, it means the orphanage is not providing the quality service to the beneficiaries. Instead of providing the quality to the beneficiaries, they are paying high salaries to the staff of the organization. So definitely it means there is an issue with the management of the not-for-profit organization. So that's why different stakeholders will show interest to know how this particular not-for-profit organization is functioning. So that's why value for money plays a very important role. So providing best quality service with a minimum expense. Next, it is generally taken to mean that the pursuit of economy efficiency. Now, normally value for money includes three E's. This is very important. I want everyone to please memorize this. Value for money mainly includes three E's. One is economy, other one efficiency, and the next one effectiveness. You can definitely expect one MCQ. You can't even think about an FM paper without a question on three E's. So please focus on this. First, we try to understand the difference between effectiveness, efficiency, and economy. So first, we'll go with effectiveness. Effectiveness is a measure of outputs. It is that services, facilities. Here, example, number of people stored, percentage achieving the key stage targets. Effectiveness can only be measured with respect to the organizational objectives. So it means generally by considering, by relating with the organizational objectives, we can consider the effectiveness. Suppose let us assume that if I take a school as an example, now the main objective of the school is this particular year they want to provide a free education to 100 students. So their objective is to provide free education to the 100 students. Now, in order to know whether they achieved their objective, in order to know whether the school is functioning effectively or not, first we'll be seeing whether they provided, whether they succeeded in providing free education to the 100 students. So their target is 100. So out of 100, how many students they provided the free education? That is effectiveness. Now, when it comes to efficiency, it is a measure of output over the inputs. So resource utilized, average class size, cost per pupil. Very important. It means that measure of outputs over the inputs. It means how much money you are spending and how much output you receive. It means in order to provide that particular service to the beneficiary, how much you incurred, how much the not-for-profit organization incurred, and what is the outcome. Whether the outcome is quality outcome. So when it comes to educational institution, here you can see the resource utilization, average class size, cost per pupil, all these things. Suppose example as I mentioned that the main objective of the school is to provide free education to the 100 students. Now in order to achieve this, let us assume that the school management allocated a separate class, and in that particular class only all the 100 students were given training. Now, can we consider that the efficiency is achieved? Is it possible to provide the quality service with a class of 100 students? Because if you make all the 100 students sit in the same classroom, if they would have segregated into the sections, yes, we can consider that efficiency was there. I hope you got my point relating to the efficiency and the economy. So economy is being effective and efficient at the lower possible cost. It means always the company should focus on the minimizing the cost without compromising the quality. So without compromising the quality, if you minimize the cost, then that can be considered as an economy. So value for money mainly focus on these three. So I request the participants to please once go through these three E's: effectiveness, efficiency, and economy. This I am giving 1 minute time or 2 minutes time. Please once go through. You want me to give explain the effectiveness? Okay, definitely. So here I took an example of a school. Suppose a not-for-profit organization is there, which is providing the educational facilities to the rural youth. Suppose it is located in a specific rural area, and their main objective is to provide free education or provide the quality education in that particular area. So effectiveness is means the measure of output. It means how many students they provided that particular quality education during that particular. It means if the organizational objective is every year they want to provide at least 200 students. Now, how many students they provided during the year? So, what is the percentage of training? That is known as effectiveness. It means did they achieve their target or not? Their target is to provide 100 students. So, did they achieve that or not? That is known as effectiveness. Okay, and efficiency means how quality service you provided. So, what kind of quality you provided? See, providing education, providing free education is an objective. And if you achieve the target of providing 100 students, yes, we can consider that it is effective. But when it comes to efficiency, what is the quality of service you provided? Suppose let us assume that you recruited only one teacher and you made one teacher to teach all the subjects and you made all the students to sit in a single classroom. Suppose if your target is 100, so you are having only one classroom, and in that particular classroom only you made all the students to sit, and only one trainer is there to teach all these things, and you didn't give proper books also. There were no notebooks, just you made students to sit in the classroom. That's it. Of course, you might have achieved the effectiveness, but you failed in achieving the efficiency. I believe you understood the difference between effectiveness and efficiency. Is that clear? Before I explain once again the economy, let me know whether you are clear with effectiveness and efficiency. Now, economy. Now, here, economy in the same example, I want to continue. Yes, you bifurcated the 100 students into two classrooms. You provided good books, bags, and hygiene atmosphere in the classrooms. Perfect. And you recruited the staff also. Let us assume that 6 staff or 7 staff are there, and you are paying 1 lakh per month as a salary to the staff members. Now, can we assume that they achieved economy? So don't you think here you might have observed the wastage of the financial resources, right? Instead of recruiting, paying that much, you would have utilized that particular amount for providing other service to the beneficiaries. It means what I am trying to say, you would have utilized that particular amount to train 100 more students. So that is known as economy. Economy mainly focuses on providing the best quality service with as lowest as possible. I'm not saying that always you need to go for minimizing the cost, but always you try to minimize the cost so without compromising the quality. Okay, so I hope three is clear now. Shall I move on? Yeah. So the last one here, system analysis. Now, in order to know the value for money, we generally go with the system analysis. So system analysis and the performance measure can be used in assessing the value for money. So there are major four outcomes or the four important elements or the components which are to be considered in the system analysis. So the first component is input, and the second component is the processes, how it is processing. The third component is output, and the next one is outcome. So input, if you see, generally we do consider the material, staff, and cash. These are the input. So value for money focus on the cost and the cost control, especially relating to the input in our value for money. If you apply the concept of EFM, we mainly focus on economy. It means when you are inputting the material into the system, so generally material, staff, or cash, whether you minimize the cost or not. It means whether you achieve the economy or not. And the next component, that is the processes. So interaction of people, structure, information, and tax requirement. So what is the task the company involved in it? So sorry. Here value for money focus on system and methods. That is, it mainly focus on the efficiency. So what is your process? What is your internal control system, or what, how effectively you are processing the inputs? Then output. So what is the final output, goods or services? And outcomes, whether you meet their objectives. So outcome means we can relate it with the effectiveness. Now here a small task I want to give. I will be giving 5 minutes time. Take a school as an example. Now take a school as an example. Now I want you to identify the input, process, output, and output. So what will be the input? You need to identify that processes, output, and outcome. Later we'll focus on the three. I hope you understood my query. Take an example of a school, a charitable school, which is mainly established to provide a quality education, quality free education to that particular rural youth or rural children. So what will be the input? You should identify input of that particular school, and what is the process and the outcome, sorry, output and the outcome. I hope you understood my question. So take your time. Just I am giving 5 minutes time to think about this and let me know. I hope you are thinking on that. Okay, input, students, teachers, facilities, other staff. Okay, so I got an answer from one of the participants. Okay, what will be the okay input means students. Okay, right. And what about processes? So the students, it means the beneficiaries to whom we are providing the service, and teachers. The so here instead of facilities, Hadi, we can say that books provided to them, right? Whatever the teaching, whatever the learning aids which generally provided to the pupils, that can be considered as input. Okay, and as you rightly mentioned, the other stuff also very good. So process. So now can you let me know about the process? Knowledge sharing interaction of the people and structure information. Processes, it means provide the quality education. Okay, and now okay, educational infrastructure. Okay, output might be all the students passing with the good grades. Very good, very valid point. Yeah, so interaction of people, structure, information, and task requirements. It means whatever input which we consider, how effectively the input is delivering. Nothing but how we are processing that. So how effectively teachers are delivering the content, all these things. And as you rightly mentioned, the infrastructure and the output means here whether the students are passing with good grades or not. See, if you provide the quality education, but finally if the students failed, then definitely there is no output in that. So as you rightly mentioned, the output, that is students passed, and what will be the outcome? So the outcome will be, let us assume that during the year providing a quality education to the 100 students. So did 100 students passed or not? That can be considered as the outcome. So that is nothing but effectiveness. Getting the seat in prestigious, very valid point. Excellent. Yes, yes. Because after passing out of your school, if let us assume that if the school objective is every year, if they want to send at least suppose at least to the prestigious institutes, they want the students to get a seat in the prestigious institutes. Every year, at least the target is 50 students want to need to get a seat in the prestigious institute. So that can be considered as the objective of the not-for-profit organization, and if the school succeeded in that, then that can be considered as effectiveness. Very good, valid point you mentioned. Very good. So I hope you are clear with the system analysis. Any queries? So let me know if you have any questions on this system analysis. Shall I continue? Yes. See here, just see the exam focus point. This chapter tends to be examined as part of the large question. If you can recollect, I mentioned section C, very important this concept. So you must be able to confidently discuss the key functions of the finance management. So in your exam kit, there are certain cases you can find. These cases are related to this particular concept. Okay. Now, shall we discuss a case related to this? Shall we discuss a case from your examination kit? Yeah. Now let me open this June 2009 Pinksco. Let me show that. Now here we will focus on, actually it is related with investment appraisal and the objectives. So we will be mainly focusing on this. That is, discuss 4 ways to encourage managers to achieve stakeholders objectives. Okay. Now, because they asked us to calculate the net present value also, anyway that is there in your next concept. But from this chapter perspective, see, do remember one point, especially one section, if you see the section C. So the question, the case will be the blend of different chapters. So it is very difficult to get the complete 20 marks case from a single chapter. So here you can see that it includes from the investment appraisals and our first chapter, that is the objectives of a finance manager. Okay. So, but we'll be focusing on this only. Okay. Now first we'll try to understand the case. Pinksco is a large company listed on a major stock exchange. In recent years, the board of Pinksco has been criticized for weak corporate governance, and 2 of the company's non-executive directors have just resigned. A recent story in the financial media has criticized the performance of Pinksco and claims that the company is failing to satisfy the objective of its key stakeholders. So the first paragraph, the major exhibits which are to be considered is the board has been criticized for the weak corporate governance. Governance, and in addition to that, 2 of the company non-executive directors are resigned. And there was a story in the financial media criticizing the performance of the Pinkuco. And they also claims that the company is failing to satisfy the objectives of its key stakeholders. Whoever the key stakeholders are there in the company is not satisfying their objectives. Then Pinksco is uprising an investment project which it hopes will boost its performance. So here the company is planning for an investment project, and Pinksco assumes that it will boost its performance. The project will cost 20 million, payable in full at start of the first year of operation, and the project life is expected to be 4 years. Now forecasted sales volume. No, anyway, this is not required at this stage to you. This is relating to calculation of net present value. We mainly focus on the achievement of objectives only. No, this is not required to you. Then Pinko pays a corporation tax of 26% with a tax liability. Yes. Yeah. So we will be mainly focusing on this paragraph. So here the major point is the company failed in criticizing the objectives of the major stakeholders. Okay. So discuss the 4 ways to encourage the managers to achieve the stakeholders objective. Okay. Now shall I project its answer? What is the major point which are to be considered? Now let me do this. Yes. So because we need to discuss the B part. Now, once again, if you can recollect, the question was, what are the four things which are to be considered in order to encourage the managers to achieve the stakeholders' objectives? Okay. So can anyone recollect? I hope we discussed certain schemes where we can encourage the managers to go with that. Very good. Employee stock option scheme. That is very executive stock option plan. Very good. Right. Any other, in addition to that, any other point? Only the executive stock option plan or any other point? Do anyone can recollect? Very good. Economic value added. Perfect, Adhika. Yes, Naina. ESOP, EBA, remuneration linked with revenue and profit. Yes, very good. Now we'll try to see how it should be presented in our 20 marks case, because the presentation is important. The achievement of stakeholder objectives by managers. Yeah, to provide bonus on achieving a particular profit level. Correct. The achievement of stakeholder objectives by managers can be encouraged by managerial reward scheme, for example, share option scheme and performance related pay, and by regulatory requirements such as corporate governance code of best practice and stock exchange listing regulations. Now it means that in addition to the this remuneration linked schemes, if a company have a better corporate governance system. So yesterday, I hope you can recollect. Corporate governance system means, can anyone let me know what exactly corporate governance means? Anyone? I believe definitely you can give the answer for this. What do you mean by corporate governance? Increasing the credibility of the company among the stakeholders. Very, very good. Perfect. Yes. So it means always an organization need to thrive for increasing the credibility of the company among the stakeholders. So if a company have a better corporate governance code of practice, corporate governance in the sense, see, if you can recollect, yesterday I projected a Reliance company annual report where the Reliance company is having around 6 committees. So if a company establishes the different committees, then definitely we can say that the company do follow a good corporate governance system. So same thing here. So first it speaks about the share option scheme. The agency problem arises. So agency problem means the conflict of interest between the managers or between the agents and the principal. Now principal is shareholders and the managers are agent, because principal always focus on wealth maximization, agent always focus on profit maximization. So here there is a problem of agency issue. So the agency problem arises due to the separation of ownership and control and the managers pursuing their own objectives rather than the objectives of the shareholders. Now specifically the objective of maximizing the shareholders' wealth. It means manager focus on profit maximization, but the shareholder obligation is wealth maximization. So in order to minimize this particular agency problem, managers can be encouraged to achieve the stakeholder objective by bringing their own objective more in line with the objectives of stakeholders such as shareholders. So this increased goal congruence can be achieved by turning the managers into shareholders. So how it is possible? How you can convert a manager goal into the shareholders goal, or nothing but how you can convert a shareholder goal as a manager goal by converting the managers into shareholders. So how we can convert the managers into shareholders? By issuing the executive share option schemes. Although the criteria by which the shares are awarded need very careful consideration, of course. So it means the basis on which the shares should be given to the shareholders should be created. It should be carefully evaluated. And performance related pay. So part of the remuneration of the manager can be made conditional upon their achieving a specified performance target, so that achieving this performance target assists in achieving the stakeholder objectives. So achieving a specified increase, it means that if a shareholder can increase the earning per share of a company, then we can link it with the remuneration. And if we can go with EVA, that is economic value addition, or if a company is, if you can link the remuneration of the directors or the managers with the increase in the share price in the stock market, so that can also be considered to achieve this particular goal. Then corporate governance code of best practice. So as I mentioned, if a company executes a better corporate governance system, in that case also the company can meet the requirement. If a company want to list their share in the stock market, there are certain listing regulations, and believe me, these listing regulations are very complex. So it means that there are certain rules and regulations and the requirements which are to be followed in order to list your company in the stock market. So these regulations seeks to ensure a fair and efficient market for trading company securities. So they encourage the disclosure of price sensitive information in supporting pricing efficiency and help to decrease information asymmetry. And one of the causes, it means that let me conclude this. The main agenda of the rules and regulations of listing requirements is whatever the goal congruence, it means whatever the agency issues are there, those agency issues are to be minimized. It means the managers are encouraged to convert the organizational goal as their individual goal. It means it mainly focus whether the managements are thriving for achieving the organizational goals or not. So individual goals should not be focused. So all the rules and regulations of these securities, nothing but stock exchanges, are framed in such a way that managers should be encouraged to achieve the organizational goals rather than achieving the individual goals. So that's why if a company, because in the initial information it is clearly mentioned that the company is a listed company. So in order to fulfill the listing requirements, definitely they need to follow this. And the next one is monitoring. So on theoretical way of encouraging the managers to achieve stakeholder objectives is to reduce the information asymmetry by monitoring the decisions and the performance of managers. So one form of monitoring is auditing. So I hope you might be aware. Now generally in order to minimize these particular issues, if your books are audited by an independent practitioner, then definitely this can be achieved. Okay. And one more point I want to add, if they specifically mention the number, because here they asked us only to explain the 4 ways. So always stick to your answer with 4 ways only. Don't ever try to write what you know, because unnecessarily you will be wasting the time and you won't be compensated with the extra point. Suppose if they ask 4 and if you write 5, they won't give any extra mark there. Unnecessarily it is wastage of your time. Okay, so if they mention to write only 4 points, then stick your answer with 4 points. So any question on this? Yeah, stock exchange listing requirements means normally if you want to list your company in the stock market. So suppose, I hope you might be aware about NSE and BSE, Bombay Stock Exchange and National Stock Exchange. And in these stock exchanges, you can find n number of companies where you can see the share prices of these. So if you want to list your company, if you want to display the stock price of your company in the stock market, there are certain rules and regulations which are to be followed. It means there are certain listing requirements. So you need to follow all these listing requirements. If you don't follow, your company share price will not be listed on the stock market. And how these requirements are framed. So most of the requirements are framed in such a way that managers will mainly focus on achieving the organizational goals rather than the manager their individual goals. Suppose let me take a small example. The first thing is always company should it means in the listing requirements they need to clearly disclose the earning per share of the company every year. They should clearly disclose the market value of the company every year. They should clearly disclose the profits of the company every year. In addition to that, it should be audited by an independent professional person. So these are some listing requirements. So the main agenda of these requirements is to focus on the organizational goal rather than the individual. I hope I addressed your query. Any other question? Yeah, it is a goal congruence, correct. And here a small task I want to give. In your examination kit, this is your examination kit. I hope everyone is having examination kit. Do you have? Yes. Now in exam kit, I hope you can see my screen. Section A, financial management function, environment function. Section B, financial management function and environment. So there are scenario based MCQs and normal MCQs in section A and section B. I want everyone to please go through these MCQs from your examination. This is an assignment and I want everyone to see. I'm not expecting you to write because I don't want to waste your time, but I want everyone to please go through these questions from your examination kit. Financial management function in section A and financial management environment in section A, and in the section B, financial management function and environment. So please go through all these MCQs whenever you are going through, and if you find any difficulty in understanding, just highlight that particular MCQ number. Suppose you didn't understood MCQ number 3, so just write it on a paper, because on Monday session the last 30 minutes will focus on the doubt clarification on these MCQs, so that you will be completing the preparation of this chapter 1 also. So can I expect this? So don't forget to highlight. It means definitely you will be finding some queries there. So please separately make a note of it so that you can clarify your doubts in my next session. Yes. Now the next one is basic investment appraisal techniques. Now here the basic investment appraisal technique in order to make the investment decisions. So how a finance manager can make the investment decisions? The additional questions, that is your a kind of homework, Leela. You can go through those additional questions, and if you find any difficulty in understanding, you can ask. I will be clarifying in the session. Okay. Not only are there textbook additional questions, you can, if you have the mock papers, you can refer the mock papers. If you didn't get it, you can let me know. Okay. So in order to make the investment decisions, an investor, a finance manager will be considering certain basic investment appraisal techniques. So the basic investment appraisal techniques are accounting for. So here the major elements which we focus is, first we try to understand the difference between the accounting profits and the cash flows, and we'll be discussing the return on capital employed, nothing but average rate of return or accounting rate of return, and we'll also focus on payback period. So return on capital employed and payback period are considered as basic investment appraisal techniques. Okay. So first we'll go with the accounting profit and cash flows. Now, generally, when it comes to the investment decisions, we do generally consider the return which we are expecting from that particular project, or technically speaking, return on capital employed or accounting rate of return. How much return you are expecting. Suppose if you are investing 1 lakh in a project, and if you are expecting an average return of 10,000, so the accounting rate of return is 10%, or the return on capital employed is 10%. So before that, first we clearly understood, we try to understand the difference between accounting profit and the cash profit, nothing but cash flows. So cash flows are better than the profit. Always, whenever you are making the investment decision, it is suggestive to consider the cash flows rather than accounting profits. The reason why the cash flows are better than the profits, first one is cash can be spent. Profits are only a guide to cash that may be available. Suppose if a company is having a profit of $1 lakh, it doesn't mean the total 1 lakh can be utilized to spend. Because if you can recollect my previous example, yesterday I think I gave an example regarding the profit on disposal of an asset. Now, profit on disposal of asset is a non-cash item. It doesn't mean that if you are having 1 lakh profit, you are having 1 lakh cash. You cannot spend profit. But profit act as a guide to expect the cash, or to expect the availability of the cash. Then profit measurement is subjective and cash is real. Now, why we do consider profit measurement as subjective? Because we do consider the different accounting policies. Suppose if I take depreciation as an example. Normally depreciation is a non-cash expense, but we still charge it as an expense in order to get the profit. We won't pay depreciation, right? It is a non-cash expense. There will not be any cash outflow on the depreciation, but we still recognize it as an expense, and accordingly we calculate the profit. In addition to the depreciation, there are other elements which makes profit and cash difference. And cash can be used to pay the dividend. So because of these three major reasons, it is always advisable to prefer cash flows over the profits. Now, when it comes to the cash flows, there is a concept called relevant cash flow. This is very, very, very important. Relevant cash flows is nothing but future incremental cash flows and opportunity cost. Future incremental cash flows and opportunity cost is considered as relevant cash flow. For your better understanding, let me give a small example. See, a company is having a machine, and machine requires 3 operators. It means in order to run the machine, 3 employees are required. I want everyone to please focus on my example. A company is having a machine which they are using for their operation purpose, and 3 employees are required to operate the machine. And let us assume that the annual salary of each employee is 1 lakh. It means the company is spending 3 lakhs towards the salary of those employees to run the machine. Okay. Now the company want to go for replacing the machine. It means whatever existing machine is there, they want to replace the existing machine with a new machine. If they replace it, instead of 3 employees, now they need only 1 employee. If they replaced the new machine, old machine with a new machine, they required only 1 employee. Now, in this case, how much cost the company will be saving towards the salary of employees? Previously, they need 3 employees to run it. Now they need only 1 employee. So what is the cost saved? 2 lakhs. This should be considered as a relevant cash flow. I hope you understood the concept. Did you understood? Is it clear? Because the company is saving a cost on the salary of 2 lakhs, that is considered as relevant. Okay, for a better understanding, let me put it on Excel sheet. Old machine, three employees. So they are paying a salary of 3 lakhs for all these 3 employees. Now, if they replace it with a new machine, if they replace with a new machine, now they need only 1 employee. So it means that only 1 lakh they will be incurring as salary. So in this case, the company saved a cost, the salary cost of this 2 lakhs, we say it as I hope it is clear now. So it means that whenever you are making an investment decision, just as an example, anyway, we'll have a detailed discussion on the relevant cash flow, but in order to make you to understand the concept, just I took this example. So while you are making the investment decisions, we do need to consider the relevant cash flows. It means whatever the incremental cash flows which we are expecting, cash flow doesn't mean that the actual cash inflow. The cost saved can also be considered as the cash flow. So in this case, the company is saving the cost of 2 lakhs. Yeah, I completely agree with you. Yes, the cost of new machine. No, we won't be considering exactly the cost of new machine. We assume that the machine is taken on by borrowing the fund, and whatever the interest which we pay, that can be considered as a cash outflow. So that will also be considered as a relevant cash. Suppose example, very good point you mentioned, Anton. Let me explain this. Suppose here how much cost I saved? 2 lakhs. Let us assume that the cost of new asset, the cost of new asset is 10 lakhs. And I borrowed this 10 lakhs to purchase the new asset, and I'm paying an interest of 10% on this. It means how much I'm paying interest? 1 lakh I'm paying the interest. Now in this case, cost saving 2 lakhs less So interest 1 lakh. Then my relevant cash flow would be 1 lakh. Is that clear? Anyway, we do have certain illustrations. I will be explaining that. But for this particular point, just you need to understand the meaning of relevant cash. I hope it is clear. Yeah. So use the relevant cash flows. So future incremental cash flows and opportunity cost. And opportunity cost, any idea about this? What do you mean by this opportunity cost? Cost of next best alternative. Okay. Can anyone will try to give an example? Now let me take this example only. Now, before purchasing the machine, how much I am showing as an expense towards the salary? 3 lakhs, right? And I believe everyone might be knowing this 3 lakhs can be shown as an expense. It means if I show 3 lakhs, my profits will be decreased. It means my tax will also be decreased. So when I'm using the old machine, I can have a benefit of tax on this 3 lakhs. It means 3 lakhs, if my tax rate is 30%, let us assume that my company is paying the tax at the rate of 30%. So I'm saying I'm saving around 90,000 towards the tax. I'm saving 90,000 towards the tax, sorry. Now in this case, how much I am incurring? 1 lakh towards the salary and 1 lakh as interest. It means instead of claiming an expense of 3 lakhs, now I am claiming an expense of only 2 lakhs. So on 1 lakh, I am missing my tax advantage. That is 1 lakh into 30%. So this 30,000 is my opportunity cost. I hope you understood this. Because if I would have claimed 3 lakhs, if I would have considered 3 lakhs as my expense, my tax refund or the tax deduction was my tax. I would have saved 90,000 towards the tax. But now when I replace the asset, I am claiming only 2 lakhs. It means 30,000 I am foregoing towards the tax saving. So this 30,000 I can consider it as opportunity cost. So from this 1 lakh relevant cost, I can deduct this opportunity cost of 30. Finally, I can show my relevant cash flow as 70. Now I believe you understood the concept of opportunity cost here. Is that clear? Yeah, let me repeat it. See, normally, if I am going, or let me put it this way, my total revenue is 2 lakhs, sorry, 5 lakhs. And less my salary paid to staff. It means expenses towards the salary. So I am taking this example by considering the old machine. So how much I am paying salary? 3 lakhs. So my residual amount is 2 lakhs. And on that, I am paying a tax at the rate of 30%. So it means that total tax payable is 60,000. So this is about old machine. If I replace with a new machine, My revenue 5 lakhs. Salary. So how much salary I will be paying now? Only for one employee I am paying salary, right? That is 1 lakh. And I am paying interest. That is my finance cost or nothing but interest. So how much interest I am paying? 1 lakh. Now what will be the tax now? 5 lakhs minus 2 lakhs. Sorry. Yeah, 5 lakhs minus 2 lakhs. My tax will be when I was using my old machine, how much tax I am paying? 60,000. When I replace it with a new one, now how much tax I am paying? 90,000. Right? So because of replacement with a new machine, my tax has been increased to 30,000. This increase of 30,000 can be considered as opportunity cost. I hope now you understood this. Yeah. Any other queries? So here relevant cash flows means we should consider the incremental cost and opportunity cost, but future nothing but it means ignore the sunk cost. So sunk cost means whatever the cost which has been already incurred, because that particular future incurred nothing but cost which is incurred should not be considered for relevant cash flows, and incremental, that is ignore the committed cost and ignore the opportunity cost. Then cash flows, ignore the depreciation. Now opportunity cost include value of cash flow of best missed opportunity. So here as I mentioned, we need to consider the opportunity cost which will have an effect on the cash. If the opportunity cost is imputed, it means if it is results in a non-cash. See, this tax, can anyone let me know, is it a cash or non-cash? Because tax we should pay in cash only, right? Previously we are paying 60,000 cash. Now we are paying 90,000 cash. It means there is a cash outflow of extra 30,000. So this cash, this kind of cash related opportunity cost should only be considered. If the opportunity cost is non-cash related, it means it is imputed. If there is no cash flow, then that should be ignored when you are considering the relevant cash flow. Very, very important point. We need to consider the opportunity cost only when it is a cash related. If there is any cash inflow or outflow. If the cash is not related to that, if the cash is not included, we should ignore the opportunity cost. I hope it is clear. So any question on this? So let me know if you have any question. Is it clear? Yeah. So now next 5 or 10 minutes we'll have Q&A session. So if you have any question, you can ask me. So ARR and the advance in next payback period and advanced investment techniques will focus in the next session. I can feel that most of you are already exhausted, so that's why I'm not getting any responses. It seems. Shall I assume that? Yes. Yeah. So in the meantime, on today's discussion, anyone have any queries? Point C. Yeah. Now let me explain the point C. They ignore the interest payments on funding to avoid the double counting with the cost of capital. Suppose if there is no information that the funds are borrowed to acquire the asset, it means in this case, in the given example, I assumed that it means I clearly said that company borrowed the fund to acquire this new asset. So that's why I'm considering the interest. If that information is not given, we cannot consider this particular interest while calculating the relevant cash flow. Because in our in a simple way, what I'm trying to say here is when you are following the time value of money, when you are going with the discounted techniques, we will use the cost of capital to minimize it. Anyway, with our further calculations, you can easily understand. But at this particular stage, you need to remember that if there is no information regarding the funding, if you are assuming that the funds are used by your internal, it means you didn't borrow the money from the external source. In that case, we should not consider the interest for calculating the relevant cash flow. But here I clearly mentioned that the company borrowed the amount of 10 lakhs from a financial institute. So that's why I considered the interest. If that information is missing, we cannot consider the interest for calculating relevant cash flow. So this is what the statement C says. Okay. Any other queries? Now, apportioned, first let me explain about the apportioned here. So incremental, ignore the apportioned cost. Apportioned cost is nothing but indirect expenses. Say in a company, we do have certain indirect expenses. Now, while calculating the relevant cash flows, these indirect expenses should not be apportioned. Suppose if there are any common expense, let us assume that if I take same this machine as an example, the machine is installed in a factory. Now the company is paying a factory rent of 1 lakh per annum. Now here the question is whether we need to apportion that particular 1 lakh factory rent when we are considering the relevant cash of machine means no. Indirect expenses, if you are not incurring any direct expenses on the machine, those expenses should not be considered for calculating the relevant cash. Once again, I repeat, only the direct expenses are to be considered for the relevant cash flow. Indirect expenses should not be considered. That is, ignore the apportioned cost. I hope you understood it. And the next question is, what is corporate excess? From where you found it, Tarun? Can you please little clear on your question? I didn't get you.
Sir, it's part of the non-executive directors.
Okay. So non-executive directors. So you want me to explain about non-executive directors, right? Is that your question?
Yes, sir, but one of the requirements is they shouldn't conduct corporate excess. That point
Yeah.
can.
Yes. I understood. Now here, let us assume that in the corporate governance system, normally uh, the combination should be equal. It means if in a committee, let us assume that if the committee consists of under 10 members, so 5 should be from the executive directors and 5 should be from the non-executive directors. If the non-executive directors are more, if the executive directors are more than the non-executive directors, we generally assume it as corporate excess. So executive directors should not be more than the non-executive, because the simple is, if the majority of the members are the executive directors, then the ultimate objective of the corporate governance system will not be considered here, because they might dominate the non-executive directors when they are making any decisions on any specific issue. So always it is preferable to have an equal a candidature of both executive or non-executive. So I hope I addressed your query.
Yes, sir.
Yeah.
Sir, can I ask something more? One more question.
Yeah, definitely you can.
Sir, in executive directors, it's mentioned there should be a clear disclosure of directors' total emoluments and highest paid UK director. Why is it mentioned like that?
Yeah, it means that in your financial reporting also there is a concept called related party disclosures. It means whatever emoluments are nothing but remuneration payable to the executive directors. So whatever emoluments which are payable to these executive directors should be clearly mentioned. So how much amount is paid, whether it is how much commission is paid, how much salary is paid, how much nothing but bonus is paid. And the next point you said about highest, can you repeat that point? Tarun, can you repeat the point?
Yes, sir. The highest paid UK directors, it should be compared with the highest paid UK director.
Yeah, it means that what I'm trying to say here is we will be comparing it with a benchmark. Now here the highest paid UK director can be considered as a benchmark. So we need to compare the emoluments payable to these executive directors with them. Right. So the purpose of comparison is in order to know whether the company is overpaying any emolument to the executive directors. Okay. Now why we consider, see in India, suppose if you see in India, let us assume that a specific company director was paid 1500 crores per annum. Now, as per the good corporate governance system, now the other company, whatever directors emoluments which are paying to them, we can compare with this. Because the reason for comparing with the highest paid directors or UK directors is, see, there are several factors which are to be considered for deciding the pay structure of these people. So if you compare this, we will be knowing whether there is any over statement of emoluments or if the directors are paid any over emoluments. So that is the main purpose of considering. But the simple logic is, in order to give an assurance to the stakeholders that executive directors are not paid overpaid, nothing but they are not overpaid. So this is the basic agenda of this particular rule. Okay.
Okay, sir. Thank you.
Good. Very good question. And for your better knowledge on corporate governance, I suggest to once go through the corporate governance chapter in your audit and assurance. You will be getting a clear knowledge on it.
Okay, sir.
Yeah. So, any other question? So once again, I repeat, please go through the exam kit MCQ section A and section B relating to financial functions and environment. So just assume it's as an assignment. Assignment doesn't mean that I'm not expecting you to write, but I want everyone to please go through. And I believe you have good amount of time because next session we are having it on Monday. So I hope these 2 days are sufficient for you to go through that. Is it sufficient? Most of
Sir,
them are MCQs only, Naina. Yes.
sir, I had a doubt.
Yeah.
Sir, in the study text, there was this topic of disadvantages of managerial reward schemes. So there was a point which said that there is only one measure that focuses on final effects rather than operational courses. So what does that mean?
So it means that it focus only on the final effect, means the final effect is nothing but performance of the company. Suppose let me give an example. The disadvantage of this is, so it only suppose if I take example of earning per share. So the final effect is earning per share. So if the company managers are able to achieve the desired EPS, then they will be rewarded. But it won't focus on the operational efficiency of the managers. It means, see how they are achieving that EPS. Whether is there any contribution for upliftment of the standards of operating activities. So that is completely ignored. That is not focused. Only a specific final effect will be considered in order to decide the reward schemes to the managers. So the basic operational performance of the managers are completely ignored there. Of course, the manager activities plays a role to increase the EPS, but there is no analysis of the operational activities. It means what I'm trying to see that how the company managers minimize their EPS, either by controlling the cost or either by any other factors, so that are completely ignored. Only a final fact is considered. Okay.
Okay, sir, thank you.
Yeah. Any other queries? So I think we can end the session. So that's it for today. So on Monday, we'll be focusing on the remaining investment appraisal. We'll discuss the investment appraisal techniques. Okay. So have a good day. We'll meet on Monday.